The views or opinions. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. Today we're going to talk about something a little bit different. We're going to talk a little bit high level about real estate in Texas. Really, real estate in flyover country. I was kind of amazed. I shouldn't say I was amazed. I was trying to sneak one by everybody. And let me explain what that means. I really don't want to address what's going on in California and in certain parts of Florida and in parts of Washington and New York. I really didn't want to address that on the show because I'm going to say one thing and people are going to hear something completely different. Let me give you a good example. Most of the major news outlets, national news outlets, really come out of two places: California and New York. A lot of it's very New York centric. So when you hear something crazy like Trump's popularity is down and it's really bad and nobody likes the guy, it's below 50%. That's a good headline you'll hear. Don't worry, I'm getting to real estate here in a minute. I just got to make a point about the news cycle. You will hear Trump's presidency is below 50% approval. And they'll say it in that dark tone like that. He will never be reelected and everybody hates him. And you're like, well, what is going on? And you think that the whole, everybody doesn't like this guy. Everybody, Trump's trade deal, there's no specifics. It's the worst. It's going to be the worst trade negotiation ever. And you're thinking, oh my gosh. The problem is they don't compare it to anything else. Case in point, compare Obama's approval rating at this time in his presidency versus Trump, and you'll find that Trump is actually higher. Yet the news, which is true, it's below 50%. He's the worst president ever. And it's like, well, wait a second. That's what they're implying with that. So the problem is that all of our news really comes from two parts of the country, which, let's be really honest here. Don't tell the people from New York or California this. They are completely disconnected from reality. We have to establish that. They really are. Those two markets have nothing to do with what happens with the productive class inside the rest of the country. That's brutally honest, and it's true. Those two states dictate what you are given as information on a daily basis. So I have been extremely reluctant to talk about the impending downturn in single-family real estate because it's only going to happen in the next 12 to 24 months in a few markets. Yet, it's going to come across the national newswire as if it's happening everywhere in the United States. I have tried to avoid this for the last few months. I didn't even want to talk about it. I don't even talk about it with other real estate investors. I just didn't want to say a word because I know what I say and what people hear are two totally different things. So I got some emails yesterday. I even got one from some of our Right Path Real Estate Club members. And I was like, oh man, I'm going to have to address this on the radio at some point, and I really don't. I'm like, okay, well, Friday might as well be the day. So I'm going to read to you a headline. And we're going to have to put on our smart, intelligent real estate investor hat, because you're going to have to, and this is not, how can I put this? I don't want to seem like I'm talking down to anybody, or this is something that you've got to put this filter on every single day, because what comes out of California and what comes out of New York is typically 180 degrees different than what's happening in the rest of the country. But the problem is that if you're reading national news sources, if you're watching the national news sources, reading the national news, you're going to get a completely different story. You really are. And it's hard to discern from that, because if that's all you're reading, if that's all you're taking in, you think like, oh my gosh, there's all this other stuff. There's all this bad stuff going on. There's really not. There's some, I will tell you, and you can go ahead and record this. This will be shuttled off to YouTube. It'll be on iTunes. I'm going to go ahead and make this prediction. Somewhere in the next 12 to 24 months, California real estate, certain parts of Washington and Oregon, and really what I'm talking about is Portland, King County, which is Seattle, Miami-Dade County in Florida, and New York in Manhattan, real estate is going to be an absolute bloodbath. That's my prediction. Now, here's what I know happens. People will hear Jason Bible says real estate, single family, bloodbath, it's all going to fall apart. That's not true. It's very specific markets. Most of the markets in Southern California are on their deathbed. They have been for about a year. I haven't said anything about it because my concern is I start talking about downturns in real estate and everybody assumes that's going to happen in Houston or in San Antonio or in Dallas-Fort Worth or in Oklahoma City or in New Orleans. And I'm like, those markets are completely different than these other markets. However, I got to talk about it now. I have to talk about it because you're going to start seeing the news stories. In fact, the stories came out this week, and I was really hoping they wouldn't. And I'm like, oh, man, the media's starting to catch up. So I got to talk about it on the show. There is an impending bloodbath that's about to happen in a handful of markets. SoCal, and I can't remember what the county is that is Portland, but it's going to be Portland. It's going to be King County. It's Miami-Dade. It is Manhattan. It's parts of New Jersey. I mean, it's going to be a bloodbath. Absolute bloodshed. And there is some data that's come out in the last week that it is starting. And I've been getting emails because you guys are reading those national sources. And I'm just going to say what's going on in Texas. Oh, by the way, you can go ahead and add Austin, Texas to this mix. Yes, there is a Texas market that functions completely out of the normal bounds of these markets. It's Austin. I think Austin rental properties, if you can find them, which is like Southeast Austin, great. But Austin itself, it's like California there. Stuff South Austin, North San Antonio up to South, I think that is a fantastic market. That little hill country market is awesome. But Austin proper, no, sir. Let me put it to you this way. We were meeting with some of our members up in Seattle probably 3 months ago now. And we were looking at King County. King County's experienced 3% a month in appreciation. That's 36% a year. 36%. 3% a month. When do you think that stops? And when it stops, does it stop real gently or all of a sudden it's like a punch right in the face? In fact, if you want to rewind a year ago, look what happened in Vancouver. That's where it's like flowing into these different markets. So I'm going to read to you a headline. Southern California home sales crash. That's true. Southern California home sales crash. This is from CNBC. Now, guys, little secret here. I don't trust these news agencies as far as I can throw them. So I've not dug into the data, but we're going to get in the article here in a minute. So just bear with me here. Southern California home sales crash. True, comma, a warning sign to the nation. This is the name of the article. Southern California home sales crash, which is true, comma, a warning sign to the nation. Now, here's why I hate articles like this, and I hate most of the media. Most of the media, national media, is horrific because they do stuff like this. They say Southern California home sales crash, and you're a real estate investor or you're a mom and pop investor that owns a couple of rental properties in OKC, right? Or you're in Atlanta or you're in Philly, and you see that and you're like, well, who cares? I don't live in California. And then there's this comma, and the comma says a warning sign to the nation, and you go, oh my God, oh, what's going to happen to real estate? And then you start tearing through the article, and Jason wins the crash coming to Houston, and I'm like, it ain't, man. Trust me, guys, I would love for there to be a crash in Houston real estate. Trust me, I would love for there to be a crash. You know what else I would love? Here's another thing. There is a part of me that wishes that I couldn't sell $1 of real estate education because everyone is so scared to get into real estate. I would literally, kind of like all the millennials are calling Trump literally Hitler. I would literally own, me and like 7 guys and a couple of gals, a couple of investors here in Houston. If people were so scared they didn't buy a dime of real estate education, our little Right Path Real Estate Club here would quite literally own half the city. I kid you not. We've got millions and millions and millions and millions of dollars in real estate and are in cash that we can deploy, and then we've got a banker that's got, gazillions of dollars we could borrow. We could quite literally own half the city. However, that's not going to happen. I wish it would, but wishing for something and what reality is are two totally different things. So Southern California home sales crash, a warning sign to the nation. Now, what's going on in California? Sales of both new and existing homes and condos dropped 12% year over year as prices shot up to a record high, according to CoreLogic.
1 minute.
Median price paid for all SoCal homes sold in June was a record $436,000, a 7.3% increase compared to 2017. So their prices are still rising while sales are declining significantly. California has a huge problem. And I'll tell you what, I still do not believe that the changes in the tax law that took place in January of this year have really hit those markets. I don't think it's going to be until sometime in 2019 when companies and individuals start looking around and say, you know what, it is too expensive to live here. So I think in a lot of these high tax states and counties, people are going to begin to leave in droves in 2019 and 2020. So the question is, where are they going to go? And we'll get to that on the other side of the breaks. Jason Bible, Right Path Real Estate.
Mike's off.
Are you
Morning,
looking for
Brian.
an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling.
Hey, Matt, is real estate crashing in Corpus? I imagine it's not.
Or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling.
Bring
of
on the
single-family
trade
investment
war.
properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
1 minute.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
This is Business 1110.
All right, Jay, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. We're talking about some articles that are coming out, slowly dripping out. I really hope they wouldn't come out so soon. I was waiting maybe next year. I was thinking maybe next year we'll start talking about this. But certain markets across the country they're in peril already. It's going to get worse. And the national media is going to use this news and say it's happening everywhere, and it's not. It's not. It's New York. It'll be Miami-Dade, although I haven't looked at the Miami-Dade data, but I can just about guarantee in the next 12, 24 months it'll be an issue there. It's Southern California. It's King County, and for the life of me, I cannot remember what the county is there that's in Portland. But it's in those big markets. And the question is why? Jason, what's going on? Well, ask folks in Vancouver, Pacific Northwest, and SoCal, and in some of these other markets, who's been buying a lot of that inventory? Some of it's speculators. Some of it are companies betting on future appreciation. But it's also a lot of foreign investors. And when this trade war got kicked up, a lot of that Chinese money started drying up. There's a whole article in the Wall Street Journal. Chinese reverse big U.S. real estate buying spree that helped boost prices. Here's the most important part in this article. Chinese insurers, conglomerates, and other investors have turned net sellers of U.S. commercial real estate for the first time in a decade. They've spent tens of billions of dollars to acquire hotels, office buildings, and vast swaths of empty land to build residential towers. They've been doing that for 10 years straight. And all of a sudden, in the last 8 weeks, they've stopped doing that. And the question is why. Actually, it was kind of interesting when I was reading through the companies. Now, these are big companies. These are, like the equivalent of AIG. And, I mean, they're big insurers. This isn't like, a family that's got a few $1 billion that's going out and buying some real estate. These are gigantic firms in China. One of them is and I think I'm pronouncing this right, is Anbang, Anbang. And when I first read that, I was like, well, wait a second, who's that guy? And I said, that name sounds familiar. And I'm like, oh, yeah, that's right. Yeah, the CEO was charged with all kinds of stuff he shouldn't have been doing, fraud and a bunch of other stuff. I'm like, that's right, I forgot. There's so many of these guys that are doing illegal stuff over there. You can Google it up, and it's entertaining to read as all get out. I've never been a big believer in the Chinese economy, just between you and I. I'm not buying the narrative, let me put it that way. You can't. What's fascinating is when you really start digging into this, the Chinese government is pushing these Chinese government-owned companies to deleverage, start paying down debt, which is one of the reasons why you see the Chinese now selling or not buying as much real estate in the last 6 months. Well, if your economy is really roaring, why do you need to pay down your debt? I mean, why do you need to do that? If everything's good and you're about to go to war with America over trade, I mean, why would you have to pay off your debt? There's an article about the GDP numbers today that have a lot to do with soybean orders ahead of this trade war. Well, if everything's good and you're going to win the trade war, why do you need to start putting the fences up? There's a lot of stuff that's going on in the economy right now that is completely opposite of what we're being told from the national media. I cannot wait for the trade war. I really can't. Because the reality is these countries need us way more than we need them. They need us way more. And it's going to be great for our real estate market. It really is. Now, it's not going to be great for those markets that have experienced, 30, 40% rates of appreciation over the last couple of years, but it's going to be great for the rest of us. I actually think you're going to start seeing, I don't want to call them refugees, but essentially you're going to see a flight out of some of these countries, the EU, and in certain parts of Asia. They're going to come to the United States and they're going to start setting up businesses. I think you're going to start to see a lot of that. You're going to see a lot of people moving out of those markets if they can, because they know all the money and all the action is here. And I'll tell you right now, if you look at, and guys, I want to, let me kind of put this in a bow as we're talking about, you're sitting here listening like, why is this important to buy a rental property in Houston, Texas? Real simple. Look at all the foreign dollars that come in the United States. How many of those dollars end up in Texas? And the answer is the vast majority of them. If you thought real estate appreciated a lot now, just wait. Just wait. You think Dallas, Texas is... you know what's fascinating about Dallas? It's only second to New York City for headquarters of Fortune 500s. When you add Dallas and Houston together, this is where it gets really fun. There are companies that are headquartered all over the globe, but their offices in either Houston or Dallas are bigger than their corporate headquarters. Their corporate headquarters are really just, that's where the executive team is. But their real corporate headquarters, where all the real work gets done, is typically in Dallas or Houston. I mean, you look at some of the, Chevron's a good example. They've got an enormous campus here. AIG's another one. AIG's in New York, but they got a huge campus here. Why is that? Well, they're going to keep their headquarters in New York, right? Because that's prestigious. But the campus here is just as big. So is Chevron. So when you look at Texas, what are these guys going to do? We got wealthy companies. We've got wealthy real. They're not going to sit there in these foreign governments or these foreign countries anymore. They're going to start moving here. They're not going to L.A. They're not going to now, if they're in tech, they might be going to Silicon Valley. They might end up in Seattle. But heck, a lot of them are going to end up in Austin. They're moving here. So when you look at your real estate portfolio, when you look at your portfolio, and you look at the, quote, impending trade, war that's going to happen, would you rather own Apple stock, or would you rather own the rental property that new Apple employee is going to live in? Do you want to own Exxon stock, or do you want to own the house that the Exxon employee is going to rent from you in Spring, Texas? And I can tell you, I would much rather own the house. Because as these companies start to come back into the United States, and they start looking at how much they're going to pay in taxes, especially with these changes to the law, and their employees, they start looking at why do I live here in California? I mean, it's beautiful here in California, but it's getting so expensive to live here. Why would I live here when I could buy twice the house for half the cost in Texas? Why would I continue to? It was fascinating. We're watching, Sarah and I are, my wife and I are looking at doing this blog and all this other stuff. So we're watching a lot of videos from Casey Neistat. And one of the things I found fascinating is his company's in New York. He's also thinking about opening up a little branch in L.A. His wife's family and some of his family are in L.A., but he lives in New York. And if you've ever made that trek from New York to L.A., that's a poke of a flight. That's a long day. Well, his wife said, you know what? I wouldn't be adverse to moving to Texas. Well, yeah, why not? It's hot here, but you get to keep more of your own money. Real estate's less expensive. There are a lot of people, a lot of families that are having this same discussion right now.
1 minute.
Where do I live? Companies are having this same discussion. Where do I live? And if you start looking at population flow, you'll see a lot of people are moving out of California, which is going to slowly decrease the price in real estate, and they're moving here to Texas. Now, does that mean that the median home price in San Diego is going to be $245,000 like it is here in Houston? No, it's not. But I'll tell you, the economic growth is going to be here. Now, the national news is going to tell you otherwise. Now, why is that good for us as investors? As appreciation is where we make our money. We get back to the break. We'll talk more about it. It's Jason Bible, Right Path Real Estate.
Mic's off.
All right.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the
Multnomah County.
Find out.
That's what Portland's in, huh? I don't even know if I'm pronouncing that right.
Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281
Matt, you're probably right about that.
This investment is offered to accredited investors.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract to close associate. Give me a call today at 713-579-3611 and let's talk about how we can help you on your next transaction. NMLS 514497.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what.
Dang it, he doesn't tell you what lens he's
using. As a
using.
whole, doesn't carry a license, nor is it regulated. However, Foundation Check utilizes
Come on, Mark, what
professional
lens are you
engineers
using?
to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs,
12 by
lawyers,
35?
bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
You found or inherited a great
30
investment
seconds.
property.
Okay.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
All right, Jay, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. So here's what I'm going to warn you guys of. You're going to hear from the national news for the next probably 12 to 24 months that real estate is crashing. That's what this article says. I mean, it says right here, it says, I could just hear, oh my gosh, Southern California home sales crash. A warning sign to the nation. You know, SoCal's been hot for so long. I mean, it's absurd. We have a lender out there, our banker. He was telling me about a house he was going to buy that he and his wife were going to flip. And he said, you know, the most expensive house that ever sold in that neighborhood was like $845,000. And he said it was a doll house, just $845,000, beautiful house, beautiful rehab. And he said, we went in, I want to say, he said they went in with a number at like $725. And he said it needed everything. Like $200,000, $250,000 rehab. And he thought, well, we'll see if we can, you know, hit the new high in that submarket in maybe the 9s. The important part of the story is that here's a house that needed $150,000, $200,000 worth of work. And it sold in 11 days at $850,000, meaning a house that needed everything, a full rehab, sold for the same price as the highest sale price house in that neighborhood. And he said, man, we're just not buying anything. I mean, we're kind of done with Southern California for a while. And I said, you know, I asked him one time, I said, hey, how much did that house sell right after the crash? And he was like, 3s and 4s. He said you can pick them up in $300,000, $400,000 all day long. So hard to make money when these houses are appreciating that rapidly. I mean, that house, when it's all fixed up, assuming that house is sold, this was a couple months ago. I mean, it wouldn't surprise me if it sold at 1.2, 1.3. I mean, how do you expect to be in business when the prices are increasing that rapidly? And remember, the median home price in that submarket's in the 5s. So keep this in mind. One thing you got to keep in mind is what happens nationally versus what happens locally. And here's what I can tell you. Locally, I don't see this Houston train slowing down anytime soon. In fact, I'll pull up the HAR report and give you the numbers. So remember, Southern California sales plummeted 12% year over year. Let me give you Houston, Texas numbers. Neither scorching temperatures nor vacation plans could stop home buyers from pushing the Houston real estate market into record territory in June, as they generated the greatest one-month sales volume of all time and sent the average and median prices to new highs. Single-family home rentals were also in strong demand. By the way, June of 2018, it's now July the 27th, so we won't get the July report until halfway through August. June is the first time that we cracked 10,000 total property sales in a month. 10,000. 10,000. By the way, California, the whole state, the whole thing, sells maybe 45,000 houses a month. Houston, Texas alone, just in total sales, is the equivalent of 25% of California. Think about that for a minute. Our sales volume is a quarter of the entire state of California. That's why when people start comparing cities, like, oh, Jason, you understand, my market's so competitive and it's so hard, blah, blah, blah. I'm like, you are playing tiddlywinks compared to what we're doing in Houston. Houston is a gargantuan market. And for single family and for multifamily, truth be told, it's the only market that really matters. When you compare the rest of the nation, when somebody says, "Oh, Jason, DFW and Houston are pretty similar in property," they're similar in comparison to the as compared to the greater market. But when you compare the two, Houston is a gigantic market compared to Dallas, compared to Austin, compared to San Antonio. A lot of people beat their chest about sales price. And I'm like, sales price has nothing to do when comparing market to market. What matters is how many houses get sold. Houston is gigantic. And we just cracked 10,000 on MLS. Here's what I can tell you. There are somewhere between another 3,000 and 5,000 that gets sold off MLS. If I were to guess, and I hadn't pulled the data in a while, we're 13,000 to 15,000 properties a month. Now, here's why I mentioned that. That's a hard number for you because you're driving around Houston, right? You're driving around in the morning, you get in your Ford Raptor out there in Katy, and you drive downtown, and you're like, how many houses sell a month? I don't know, a couple thousand. You can't comprehend 15,000 houses selling a month. Most people can't. You don't realize how big Houston is. It is gigantic. This is a huge market. Huge. Like the GDP numbers today. Huge. Why is that important to know? Here's why it's important. There are a lot of people out there selling classes on how to get rich with multifamily and commercial. Here's the reality. There's only 7, 8, let's call it 10 at most, multifamily deals a month that get sold in Houston, Texas. What's the likelihood you'll be able to build wealth with multifamily apartments? It's not real high. The reality is there's just not that many deals out there. Now, if we're selling 15,000 properties a month in Houston, Texas, where are you more likely to build wealth? In apartments where less than 10 sell, or in other property where there are 15,000 sales a month? That's one of the reasons why we're in single family. There's two really big reasons. One is nobody wants to live in an apartment. An apartment is the asset choice for people who can't afford a house. Why would you ever want to be someone's second choice? I've never really understood that. Apartments are like the safety school for real estate investors. That's really what it is. I mean, it's like, I couldn't afford, I really wanted an S-Class Mercedes, but instead I got a Honda Accord. And there's nothing wrong with being old reliable, but I would much rather go into single family. Everybody wants to live in a house. Nobody wants to live like a bee. Not in Houston. Not now. Maybe a generation from now, when all of the single family real estate is then developed into high-rise apartments, high-rise condos, then it might make sense owning some of that stuff. But now, all the money's in single family. I don't see a whole lot of New York hedge funds, new REITs being created for multifamily. All that action's happened in single family because they figured it out. Multifamily market nationwide's tapped out. It's tapped out. I was at an event probably 2 years ago now. Commercial banker. And she works for a very large bank. And I asked her, and I said, hey, what kind of banking do you do? Oh, I'm on the commercial side. I do X, Y, and Z. And, oh, okay. I said, do you guys lend on multifamily? She said, we did until about a year ago. And I said, yeah, but I assume like somebody brings you a big deal or a really good deal you guys will look at. And she said, nope.
2 minutes.
We do not want any more exposure to that market. That was 2 years ago. I'll tell you, all the guys I know, guys and gals I know in Houston, actually in the entire state, the ones who I know who are very successful are in all cash. They're not buying any of these things. But then you look at single family, we've got so many people moving here. And our prices just keep going up and up and up and up. Total dollar volume has gone up 6.6%. Another way to say that is 7% appreciation. That's market wide. I'm willing to bet those of you who are real estate investors, why don't you take a look at those houses that you bought as rental properties at least a year ago, maybe 18 months ago, and see what those properties are worth today. Would not shock me at all if you've got somewhere between 10 and 20% per year in appreciation. Affordable housing is going the way of the dodo bird. There is no more affordable housing. There's none. And the prices are going through the roof. And they can't build affordable housing anymore. You're talking about $100, $110, $125 a foot. That's replacement cost. So you guys better start buying these things because they're only going to get more expensive on the long run. Grab a hold of that appreciation. You can build some real wealth. Get back from the break. We'll wrap up today's shows. Jason Bible, Right Path Real Estate.
Mic's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Do you have cracks in your brick? doors that stick, or sheetrock that's coming apart, then you may have foundation movement.
Let's
Due to our
take a
expansive
look
soils
here.
in the Houston area,
Cannon.
probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties.
That's a
Each
58
of
mil.
our files
Wow.
is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law.
This is
We
not
have
helpful.
150 employees
Amazon,
that
you
range
are
from
not
lawyers
helpful
to
today.
CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in the way
All
of
right,
your
30
retirement
seconds.
plans?
Okay.
Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906.
Oh,
Visit
here
our
we
website,
go.
jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. You're going to see a lot of media run this narrative that real estate's going to crash. Yeah, I can tell you the coasts are scared. They should be. The markets have just appreciated wildly over the last couple of years. And people are moving out. One of my favorite metrics is for every 2 jobs created, 1 house is built. For every 2 jobs created, 1 house is built. And if you start digging around in these articles, you'll find that new house construction, particularly in Southern California, has collapsed. Like decreased year over year by 50%. Well, why? Well, builders don't want to get caught with their shorts down like they did in 2008. So they just started tapering building. Because California's not they're not building a lot of new jobs. It's that simple. You know, the rumor on the street is we start this trade war gets kicked off and the economy softens a little bit, even though there's no indication that's going to happen. Houston is going to go back through a huge boom. Gigantic. God forbid oil hits another $100. We get $100 barrel oil for 2 or 3 years. Heck, our gasoline prices are already skyrocketing. That's good for the east side of Houston. But this whole idea that because the stuff that's going on in California and New York and all that is impacting what's going on in the inside of the United States, that's not true. Those markets have made certain decisions that are impacting real estate. But here in Texas,
2 minutes.
I mean, I can read the data to you again. And I'm telling you, where the money is made in this business is holding on to rental properties and riding that appreciation. Will not surprise me at all. Inside of 7 to 10 years, houses double in price. And the question is, who's buying them? It's all those folks from moving from California, from Jersey, from not necessarily from Seattle, but from New York, some markets in Florida. We're seeing it. We see it every day. Hey, where'd you come from? Next time you're at a real estate event, and preferably it's one of ours, how many of you guys were born here? I usually ask that at every weekend retreat. Very few people, when you get into a big crowd of folks, were born here. Why? Because this is where the opportunity's at. And this opportunity is driving real estate prices. Guys, I'll give you a secret. It's been driving the value of single-family real estate for 40 years. And it's not going to stop anytime soon. And if you want to build a massive amount of wealth for your family, it's buying properties in Texas. It's been great for 40 years. It's going to be great for another 40. It's that simple. If you want to learn how to do this stuff like we do, how we run our businesses and how we build wealth for our families, go to rightpathrealestate.com. We've got a 1-hour workshop, free 1-hour workshop. You can attend in person. We've got one on Tuesday, one on Thursday. Go to rightpathrealestate.com, sign up there, and we'll share with you how we do this in Houston, Texas for our business as a family. I want to thank you guys for the time today. I'll be on the show Monday, and I'll be looking forward to your emails. Feel free, shoot me an email, jason@rightpathrealestate.com. Be more than happy to read your articles and discuss things on the radio show. Thanks for listening.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio.